credit cards are credit cards are credit cards, guys. Doesn't matter if it's personal or business. They are definitely going to have a higher interest rate long term than your traditional loans. However, they don't have points. They don't have origination fees.
You are listening to Amplify Your Success Podcast, episode 389. And today we're going to dive into money talk and understand the difference between business credit and business loans and how to leverage them to grow our business. You ready for this? Let's get started. Welcome to the Amplify Your Success Podcast. Get ready to ramp up your revenue, amplify your impact, and make your mark in the world. This is the show for experts, thought leaders, and service professionals who want to shatter their limits and achieve that next level. You're going to find out from other experts and influencers how they made it. Now, let's get amplified. Hey there, inspired entrepreneurs and business leaders. It is your host, Melanie Benson, authority amplifier to expert-based entrepreneurs ready to achieve 5- and 6-figure months. And today we're going to be talking about money. Actually, more specifically, funding that helps you grow your business and how to know what you actually need. And I love the conversation I had with this guest who's a real expert in this area, because a lot of times we're confusing our personal credit, our personal financial rules and principles with business, and they don't necessarily serve each other the same way. And so if you've been wanting to grow your business, if you've been a little conflicted about how to leverage capital to grow, what should you do, what shouldn't you do, this is a jam-packed episode with fantastic information. Now, money and finances are obviously a really important part of growing your business. And I teach people how to grow $1 million authority-based business. That is my thing I do. It's my superpowers. Visibility is a big part of that, but so is knowing how to be in a powerful relationship with money and growth. And I've noticed that a lot of the people that I've worked with over the years, some of the things we have to do is elevate their mindset around money and wealth and what it takes to serve more people all over the world, is really committing to being the person who has a successful, healthy business. And if this is speaking to you, we are opening up applications for the $1 Million Authority Mastermind. If you go to mastermindwithmelanie.com, you can get all of the details about the program. This is a very powerful opportunity for us to work together to not just expand the reach of your work and to become a recognized authority, but to make good money doing it and make money in a way that's sustainable. So if you're looking for a powerful mastermind this year and you want to work with somebody who has been through all of the seasons of business and has been around for 20 plus years and still here, still making good money and still serving their ideal clients, then we definitely want to talk. Go check out the details, mastermindwithmelanie.com. And if it speaks to you, apply. The spots in this program won't last very long though, so jump on it right away. Now, let's get into today's sponsored episode. Welcome back, Amplifiers. We have a very timely topic today with a special guest. We're talking about business credit versus business loans and how do you know when you need to have each. We're going to talk about money and finance and get ready to uplevel your paradigm about how to grow your business through capital. So let me introduce you to our guest. Her name is Amanda Webster. She is the Chief Operating Officer of Fund and Grow, a national lending program that helps entrepreneurs and business owners across America get access to business funding. She has a 20 plus years of experience working in strategic growth, operational management, company admin, including human resources, marketing, IT, and she's also the editor-in-chief of Prosperity Pulse magazine, a publication that publishes in-house monthlies. So, Amanda, I am so looking forward to this conversation. And we've already discovered we have so many friends in common. This is going to be really good today.
I'm excited. Thank you for having me. I love being able to spread some wisdom and help some entrepreneurs and hopefully elevate them to the next level.
Yeah. Well, I think anytime we talk about money and we create new possibilities and new awareness and we give people tools in the side of the business, which I know we're going to do today, This is like how people grow is they change the paradigm or the belief system of how they got where they are. And if we don't know what tools are available to us, we don't know what resources are available to us, we just keep doing what we've always done, right?
Correct. Exactly correct.
Well, we're talking, this theme today is about business credit versus business loans. But I thought maybe we should start just with a foundational idea. And when is this something that we should start exploring for our business? Like, are there certain signs or certain maybe growth stages that we might be hitting when we need to secure some type of funding for our business?
So the beautiful thing is when you talk about business loans, you have definitely criteria. So you can't even think about it until you have at least a year in your business, you've established your business, you have a certain revenue flow every month that you can verify to the lenders. Whereas when we talk about business credit doesn't have that requirement. So it's actually something that you can set up from day one. This should be the funding that you're able to use to actually launch your business and be able to use it in a way that's not affecting your personal life. It's not affecting your personal score. It's everything on the business side and being able to kind of separate those worlds but also be able to give you access right away without all of the red tape and the requirements that that traditional business loan has. And I'm not knocking business loans because they are absolutely a necessary thing when you reach these points, right? There's growth points. But there's that old saying if you got to spend money to make money, but you can't spend money that you don't have. So you have to first figure out the capital. So I feel like the answer is you need to figure out your funding abilities and your plan from the moment you're building that business plan because you can't do anything without it. And the worst thing you can do is only rely on your personal cash flow, right? Because that's going to be limited to some extent. I mean, unless you're, fortunate. But even then, why use it if you don't have to? So business credit is something you can plan from day one and be able to have in place as you're launching your business.
Mm. I wish I would have known that 23 plus years ago, 24 years ago when I was starting this venture. It would have been super helpful. Um, you talk well, actually, I want to go just a little step deeper because you and I were talking about this in the green room. And before we talk about traditional financing, I think we need to talk about a common roadblock. Maybe there's like a resistance factor that so many entrepreneurs have around credit and business credit, personal credit. And you and I both know that a lot of people are funding their business through their personal credit. Um, let's talk about business debt versus personal debt and how to like get our mind and our maybe our whole paradigm in the right space for growing our business by understanding how this should work for our business.
Yeah, there's been a lot of people, a lot of big names that have talked about credit in the personal world, and it's built kind of this block, and you have to remove it for business because the rules in personal are very than in business. I always tell people you have to get comfortable with being uncomfortable in business because that's just kind of how business works. If you're comfortable, you're not growing. And so you have to be able to understand that to be able to grow your business, you have to have funding in place, access in place. You're going to have debt in your business. I've never met somebody unless they were wealthy prior to starting that didn't start with debt. It's like, did you start your life in general not having debt? Did you not have a car loan or a mortgage or, a rent to own? These are all things you do. It's the credit card, I think, is where the block starts. I think that's where everyone's like, wait a second, did you say credit card? And they're not understanding that business credit cards, which is what business credit is, they're not on your personal credit. It's not the same rules that apply. And they are an amazing tool that you can have to be able to stretch your capital in a very healthy way. But there's these unhealthy traditional things that people think that, oh God, I don't want to be in debt. I don't want to have credit card debt. And that's a great thing on the personal side. I will not argue that point. Having the goal of being debt free in your personal life is an amazing goal, and you should absolutely have it. But with business, the moment that you don't have capital available is when unfortunately, that big opportunity happens, or the big deal, or there's a competing business that you can now buy and buy into that market share. No matter what your business is, the time to have it is before you need it. You don't want to get into a situation where you need to now secure capital for something and you can't get it done quick enough. You lose on that opportunity, on that partnership, on that deal, whatever it may be. So I think that the misconception is that, in business you have to have the same rules for business credit cards. But in business credit card land, there is a huge market of points, rewards, cash back for things that you're already spending on. With Fund and Grow, we max out our business credit cards every single month because we're already going to spend it anyways. So why not reap the benefits? And we're extending our cash flow, and our balance, sheet looks amazing because we're not spending our cash in order to do that. And it's very healthy in the lending world to carry debt. That's normal. It's actually going to be helpful in your taxes. I can't talk to you about taxes, but it's very normal for businesses to have this good relationship with business debt, as long as you have the proper things in place to be repaying the debt, because obviously that's a piece of it too. You have to be responsible with it. But I think that's where it happens, is they get caught on that credit card. As soon as they know it's a credit card, it's like the conversation gets weird or it shifts, and they're not understanding that a lot of times it's the only funding that's truly available for a brand new business, because the business loans and traditional ways of getting lending in business requires a seasoned business. They require certain amounts of revenue, things like that. So this is a way to get funding from the beginning, and it's in place forever. And I'm not talking about a $10,000 credit card, because that's not probably going to do a lot for you. I'm talking about, you can get business credit cards with 90, $100,000 on them. That happens every day if you know how to do it. And so, and that can be huge. That can be something that can truly launch a business.
Okay, well, that was very insightful. And I just want to ask one last question around this because I could hear the wheels churning on the list in the listeners and thinking, okay, so you just talked about 90,000, $100,000 credit lines or credit card, uh, having that range. And is there a formula of some kind of how much debt is okay to carry in a business compared to what you're generating revenue wise?
There's definitely a healthy formula of how much you owe at any given time, right? Because you have to figure out, your formula to pay it back and how overextended. But remember, these are available limits. It doesn't mean
Yes.
you owe that money right now. This just means it's available. So there's no actual amount that would be considered too much as far as available, because you're not using that necessarily right out. It's a revolving line of credit. It just happens to be housed on a credit card. So having it isn't what hurts you. It's when you're maxing it out. That's a different story. Now, there are businesses like us that max out every month, but we pay it off every month. So it's a healthy relationship and it keeps rolling and it's great. Now, business credit cards are not designed to hold debt for long periods of time. That's not their design. They are designed to be a temporary way to extend in order for you to get an ROI to then pay off that debt. There's a lot of different ways that business credit gets used in the creative finance world, but it is a way, it's a formula. So you need to have the healthy habits of being able to pay it back. I don't know that there's a number, because if you have $200,000 in business credit and you're charging that, but you're able to pay it off every month, it's not, it doesn't matter. No lender's going to care about that. Your business is extremely healthy at that point. It's when you're holding the balances for a long period of time. That's when it becomes unhealthy.
Mm, yeah, that's great advice. Thank you. Let's talk a little bit more about traditional financing. And you mentioned earlier that there's markers, there's little factors in place that will, that's the time to apply for a business loan. Let's unpack that a little bit more.
So most business loans, business lines of credit, traditional types of lending in the business world, that they do still require a certain credit score. I know people, I think that's another misconception, whether it's business credit or a traditional business loan, they are always looking at your personal credit, no matter what you think. They are pulling it, even if it's a soft pull, they are peeking at it to make sure that you're healthy. I'm not saying that's fair. That's just the reality of what's happening. So there's always going to be some credit score there. They vary. They're a lot lower on the business loan side versus business credit because they're less dependent on the score, but it's the revenue. You have to have your business open usually for at least a year to get true offers. You need to have the healthy side would be 20,000 a month, really 40,000 a month in revenue that comes into your gross receipts coming into your bank account on the business side every month for 6 months. You need 6 months of the consistent revenue and 1 year in business before you're going to get any type of offer on the traditional business side. But I also will say, unfortunately, where we're sitting right now in this economy and in this interest rates that we have, that cost for capital is going to be much higher than most people are used to seeing or maybe comfortable. There's always a cost for capital, but right now it's a little bit higher than normal. So it also, you have to always take into account where we're at, where the interest rates are at, what's the interest rate, are there points, what are you doing with this? Is it a loan where they're handing you the money? Is it a line of credit that you can draw from? What do those draws look like? So it's always assessing all those pieces because it can get expensive for that capital. But when you get to, a million, 5 million, the offers are going to open up differently. And when you establish your business credit score, and then even a step further, I would also recommend establishing your paydex score with Dun and Bradstreet. When you're doing those things and your business credit score keeps climbing and your paydex is healthy and it's showing that you're paying back all your debts, you're going to see those interest rates drop and you're going to see that point. But that's going to be typically at like the 5 year mark. And it's going to be that you've actually done the work to build that business credit score. And you're going to want to look typically in that million to 5 million is that first break point as far as revenue.
Hmm. Good to know. I want to talk a little bit more about um, getting the most funding you can at the best terms. You're talking about sometimes this is going to be maybe uncomfortable for someone when they're looking, especially right now, our industry is in a very different place in the financial realm than it was even a year ago or 5 years ago, for sure. And terms are changing all the time. How do you like stay on top of that and really know that you're making the best decision for your business and you're keeping that financial capital growth opportunity in place?
I typically, on the traditional lending side, I recommend using a marketplace. So there's different marketplaces out there that specialize in business funding. And the reason I say that is because they can then give you multiple offers so that you know what's out there. And there's several big names out there, like Lendio is one of them. There's a lot of different ones. Doesn't matter which one you use because they're pretty much using all of the same lenders. There's not really like some special sauce going. You can go direct to places like Blue Vine or even Amex has a business line of credit offer. Um, but I would it doesn't hurt they're normally only doing soft pulls, so it shouldn't be hurting your credit. And on business credit, it doesn't matter at all. I would go out and get every offer available to be able to assess it right now. Now, yes, 5 years ago, I'd have very different advice because it would be a very different market. But you would want to be able to go out and see not only what's going to give you the most amount available, but also going to be the least cost of the capital. And you have to look at every piece. Are there origination fees? Are there points? What's the interest rate? All the things that go into it and compare because right now is a little bit more difficult. In the business credit space, it's a little different because what we do and what a lot of companies that are like us do, we're looking at 0% offers on the front side. So we're trying to be able to give you some wiggle room and some breathing room on the front to be able to start and kind of launch and get things moving before any interest rates would kick in. So but credit cards are credit cards are credit cards, guys. Doesn't matter if it's personal or business. They are definitely going to have a higher interest rate long term than your traditional loans. However, they don't have points. They don't have origination fees. They don't, they don't do there's no additional cost. You know exactly what you're getting into. And again, it should be used almost like the old style Amex charge account where you're not holding that balance longer than needed. So there's always that cost of capital. I think this is the first time, at least in my adult life, where the interest rate on the business credit card might actually be cheaper than a lot of the traditional loans that are out there. I hope that doesn't stay long term because I am a firm believer that you do need both. In order to grow, you need to have business credit in the beginning and then grow into the business loan side because I think it's the only way to do it. I don't know that Fund and Grow would have gotten where we are had it not been to have both and all of the different options because as you're growing you need more options, and that's true with lending as well. But right now it's rough, and I'm really holding out that it's gonna have a turn and we're gonna see interest rates start to level and we can start breathing again. But at the current moment, I would say you have to shop around. And with business, a little bit easier because it's not pulling a bunch of hard inquiries like it does in the personal world, and you actually can have a little bit more free commerce in that side. It's not holding you down. But I would do homework. I would look at every possible option you have before pulling the trigger and really getting yourself into a bind. And I'd also maybe look at right now the shorter terms versus the longer terms, depending on when the interest rates are, because hoping that, 6 months from now, this is a different topic. This is a different conversation. That's my hope.
Yeah. I actually saw a forecast, somebody who, one of my former clients, he sends these interest rate forecasts and stuff for the state and federal, and he did make a forecast that we're seeing a level out. So we'll cross our fingers, right?
I'm hoping. I'm hoping
Whoever
that's the
can hope.
case.
Yes.
I don't want to see him. I can't see him go up anymore. It just terrifies me for entrepreneurs in general and just small business owners. The big
Hmm.
businesses aren't getting affected by this. They're debt free for the most part.
Yeah, that's good to know. Hey, you talked about something that I just want to maybe bring forward a little bit more because sometimes we're so used to operating in these cool, like tricks of the trade, so to speak, but maybe our listeners don't know about these advantages. You're talking about, hey, leverage your credit cards for things like points and all the things that you can get. What are like your top 3 to 5 perks that you can take advantage of in a credit card for your business?
Well, the number one that I always recommend is the ones that have the cash back, the direct cash back that you can
Mhm.
either put back into the account or put into your bank account. Number two, for us is the travel side, whether it's the airlines or the hotels or even a combination of travel side, because we do a lot of shows and go to events and things like that, and so we get to a point where we're able to not, we don't have to pay for it because it's free. But
Mhm.
the cashback point system is amazing. Some of them have points that you use towards the purchases, which is the same as cashback in my eyes. It's just going right back to the card you spent it on. But those are the top ones that I look for and that I'm trying to utilize, both personal and business. But business, you just earn them a lot easier and a lot quicker, because then if you do have to hold that balance for a couple of months, which people, it happens. There's times when that happens. You're able to offset the interest charge by those benefits that are there. You're able to offset that, and it didn't really cost you anything. And then I always encourage people, like with the personal world, my advice always is don't use your debit card for anything. I don't use my debit card
Yes,
for anything.
me
It's
either.
just, I don't understand why they even give us debit cards anymore. I guess to use the ATM. I don't even do that either. But don't use your debit card for anything. Well, it's the same thing in business. Don't use your business bank card for anything. Use your credit cards for everything and then just pay them off. I don't care if you charge and the next day you go paid off. You're still going to get the points. You're still going to get those rewards. You have to spend this money anyways. So why not get the benefit of using these cards? I promise you, they don't care. They want you to use the cards. That's what it's there for. I know you don't believe me, but there are definitely benefits for the lenders to be offering it because they wouldn't be doing if they didn't. So it's just one of those things. It's the same rule. You just got to change it a little bit. You're not using your debit card in your personal life for a lot of reasons. It's the same. You have a bank debit card basically when you open your business checking account. Don't use it unless you absolutely, it's the last ditch, you have to use it kind of thing. Don't use it for the same reasons. You also have better fraud protection on
That's what I
credit
was gonna
cards than you
say.
do.
Yeah.
That's the same in the business world. It's the same theory over here. You have much better protections. It's the same lenders giving business credit cards that is giving personal. It's just able to be on the EIN and not on your personal side. So
Yeah.
it's all the same
Yeah,
rules.
and you don't have the same level of protection against, like, somebody who doesn't deliver on what they've offered you. If you pay cash, you have no
Yep.
recourse, but if you're using your credit card, you have a different, timeline that you can, go after getting a recovery of what you should have received or a refund. So
Yes.
those were very helpful tips. And I just wanted to make sure everybody listening is up to speed on that because I'm a kind of a geek about the points on my cards and I'm kind of a max user like that. It's like if I can't run it through my card and get the points, I'm like, I'm not doing it. And I think there's a benefit to it. And again, there's all layers. American Express has some very specific types of advantages and perks if you want to go that direction, travel booking and stuff like that. So I would just say on your behalf, what's important to you
Yeah.
and go find the card that can deliver that because they all operate a little bit differently. So know what you're getting, read the fine print, make sure it really works for you.
Yeah. And the
Um,
other thing I'll note, just so
yes.
everybody knows, just like you can have authorized user in your personal world, right? The business side has the same function, except for it's not tied to anyone's personal credit. So if you have employees or, you have your partners with somebody, it's the same thing. You're able to extend that out. They're able to use that card. You can put limits in place. You can control that spending. And also we use it where like each department has a card and that way we can actually control the departments a little bit better with that spending as well. So there's even budgeting abilities in the business world the same way you would with an authorized user on the personal side.
That's brilliant. Thank you for sharing that one. Okay. I just want to see if we have any kinds of common mistakes that we should be aware of as we're digging deeper into the realm of using personal or business credit and getting business loans. Anything we need to be aware of to not do.
So just like I always preach that you should never put your business expenses on your personal, you also should never put your personal on your business.
Okay.
Business credit is supposed to be for all permissible business uses, and that's really a broad definition, right? Because we can use it for a lot of things. But what I will tell you is, don't go get a business credit card and go buy a boat. It's not gonna work, and, I mean, you may get the boat, but then you're gonna lose the card most likely because 'cause they're gonna shut it down because that was absolutely not a business expense, unless you're a commercial fisherman or something, then we can have a conversation about that. But no, I mean, you need to be able to pay back what you're putting on your card. So the biggest mistake people make is just throwing everything on it and not have built that plan to be able to pay it back. So making sure that you're putting things on there, that you're building the ROI to pay it back. And that can mean a lot of things. We use our business card for marketing, paid ads, to go to events, to do this. But all of those things are then returning in time to pay off. Now, again, you can hold it for a couple of months. It's not gonna be the end of the world, but just have a plan. And I think that's where everybody gets that weird fuzzy thing in the back of their head. They're like, "Oh no, I have debt." It's okay to have debt as long as you have the plan to pay it off and as long as you're building the ROI to continue that and just keep going and going and going.
So what I think I heard you just say, and this is so important, I want to call it out, is this is not an income replacement strategy. It is a capital expansion strategy.
That is correct. These are not grants. These are very similar to a loan. It's on a credit card. You do have to pay every penny of it back. No, you have to be responsible. It's the same idea. But it's also when you think about, you go get a business loan, a line of credit and you pull out 20K, you have to pay that back. That's not just free money. You have to pay this all back. It's not a grant. It is not income. It is supposed to stretch the capital so that you can get the income to then multiply. So it should be a rinse and repeat style setup. But on the front side, that's where that 0% comes in. And then on the long side, that's where those points and rewards come in to help offset if you do need to have a little bit of interest in there. But yeah, you please pay it back. Don't get yourself there because a business credit card is personally guaranteed. They're looking at your credit. So if you default on a business credit card, they are going to come for you. So just I always like to caution. This is not like I'm not hiding anything here. You do need to pay it back. You default, I think it's after 3 months, they have the legal ability to come after you personally because you guaranteed it. So just be very careful. Again, be responsible. But this is a way to stretch, to grow. We've had people who 10x their business just by having the access to the capital because they didn't have anything else. They weren't in business long enough to get a business loan. So this was kind of their only option. And they didn't have any other personal finance. They had already overstretched themselves on that side.
Hmm. Yeah, very, very good points there. All right. So as you're listening in and you're realizing that you could benefit from having some better business credits and a business loan, how could you be instrumental in helping somebody find those options, apply for those options, learn about what's available to them?
So Fund and Grow is a service model. It's a white glove service model. So we actually, if you come over to us and we do a free consult, we'll do an actual soft pull of your credit, see exactly where you're at, ask you some questions, kind of see what your plan is, what are you trying to do, and then we will pre-qualify you and we do everything. It's a 12-month membership style, although you don't have to like renew it. It's just that one 12-month period. But what we do in that 12-month is we actually build all of these credit lines for you. You don't have to do
Mm,
it yourself. We're giving you information. We're coaching you how to use it. We're coaching you how to get the inquiries off because the lenders are going to do a hard pull once you actually apply. We're giving you all the material, but we do everything in house. We apply, we talk to underwriting. That's how we're getting these $90,000 credit limits on a card is that a computer is not giving that to you. You can go apply. I always tell people all the time, you can absolutely do this yourself. You can go apply, find the card and apply yourself, but you are relying on a computer and an algorithm to tell you whether you are worthy to get that card. And then additionally, how much are they willing to risk on you? So there's no human deciding that unless you actually talk to underwriting. And they make it very difficult to talk to underwriting. Even us after, 16, 17 years now, like we still have to do the same thing. I've got a whole funding floor behind me on this wall that's spending an hour and a half sometimes on hold just to get to the underwriter to be able to talk to them. So it's about knowing the game that they're playing because like anything else, it's convincing the human that you're worthy of the credit and that your business
mm.
is worthy of this credit. So we do everything in house. And I did put put together a little link so that they can come in and see what we were about. Do a prequal. There's no obligation. It's free to see what you could do to be able to do that.
Yeah.
So
And you actually I was so impressed. Future podcast guests, pay attention to what Amanda did. I was so blown away. She made a special page just for you Amplify listeners. Let me actually get it. We'll link it up in the show notes for you. But if you go to fundandgrow.com/amplify, so easy to remember, right? She's put all of those resources together for you on one page. So it's super simple to find. Very stellar job, Amanda. I'm so impressed. But I love the branded links because it just makes it easier for you guys to remember. But I will link it up in the show notes just to make it very click easy. So thank
yeah,
you, Amanda, for doing
you're
that.
welcome.
Okay, well, this is the time in our conversation that I totally love this part of the conversation. I want to hear from you as a business owner, somebody who's been in the trenches for over a decade, like I have. Um, what has been the boldest thing you did that ended up growing the business exponentially?
So funny enough, I didn't start Fund and Grow. Ari Page is the CEO. He started in his living room. He has a great story. He's a phenomenal person to know, very inspirational, and he's basically my mentor at this point. But my boldest thing I ever did is I actually worked in the legal world for 17 years, and I was managing law firms. And COVID happened, and it created this catapulting event where the law firm I worked for wasn't able to hold on during COVID. It was a family law firm. No one was filing for divorce. No one had any money. So the attorneys actually kind of went their own direction. And I was forced to make a decision. And I decided I was going to go find something totally different. I wanted a brand
Mm,
new challenge, a brand new thing. And I landed here at Fund and Grow, and I had to not only learn everything here, but I had to figure out how to grow it. And the biggest thing I did in growing it was actually doing an audit to get rid of a ridiculous amount of overhead. There was so much, it was just very top heavy from the growth they had during COVID. They doubled in the workforce size here at Fund and Grow during that time. They had a huge amount of influx in clients and just didn't know so streamlining the processes, and we were able to kind of get rid of a lot of stuff we didn't need. They had double subscriptions. So it was weird. I grew the revenue initially just by doing a full audit. I mean, it took me probably 6 months from top to bottom to figure out how to lean out everything. And it was nothing like I've ever done before, but it's probably also my most my most successful moment. Internally, like I felt very proud, and I actually felt like I had made a huge change in the model. And I really Ari gave me just carte blanche, like, here, do it. I trust you, figure it out. And it was great. It was a great experience. But nothing like the legal world, and a totally different show over here, and taking it over. So that was probably my boldest thing I've ever done, which was undertaking not only the team, but then that audit.
Yeah, I could see that. And I could tell how proud you are. And it's like, those are those moments where you're like, yes, this all paid off. Look at what I discovered. I would love to hear if there's something since you've moved into this role that you realized, wow, I waited way too long to do this. And once I did it, it had such a it was such a good impact to you or to the bottom line or to client attraction, something of that nature.
I think it's been actually joining groups, like
Mhm.
mastermind groups. It has opened up things that I just didn't know. It's just not something I had ever explored. And jumping into some of the masterminds that we have here, and now being like, I am in them. When I am at these events, I am like all in. I'm not doing anything else. But learning from people who are so much more successful than me, and truly listening into their points of failures, and
Mm.
let it you have to be vulnerable in these groups, and being very vulnerable is hard, for me. And so getting that vulnerable and being honest, and kind of telling my story of where I've come from, and what I've been doing, and then seeing kind of, I'm not the only one. There's so many people. We've all have these moments and these vulnerable things that have happened, but learning from hugely successful business people who, just inspire me to keep going, because they have done amazing things and come from nothing. I don't think I've ever met people in these groups that just came from money and were able to. These were all people that started some kind of vision, a coaching, a real estate investment firm, whatever it was. And it's just phenomenal to see what they're able to do, and be able to pick their brain. And it's opened doors for me that I never just even just in learning for me that I never thought were possible.
Yeah, I'd have to agree. Masterminds have been some of the best investments I've ever made. They are catapulters when you're in the ones that open a lot of doors. Thank you for sharing that. And by the way, as you're listening in, you may have recognized a trend. I would say most of my guests that come on the show talk about investing in some way, shape, or form in a coach or mastermind as one of the things they waited the longest, but got the greatest results from. So you're in good company there, Amanda. Amanda, thank you so much for joining me today and bringing your brilliance and your wisdom and your insights, and also for putting this resource page together for our Amplify community. Again, if you go to fundandgrow.com/amplify, you'll be able to see what Amanda's put together for you. And if this is feeling aligned to go exploring, if you're in the US, I don't think this works outside of the US, but if you're in the US and you want to go exploring, Amanda's also got some resources for you to do, what did you call it? A consultation or an
Yep.
audit or something. Yeah.
Yeah, we
Yeah.
do a
Great.
free
Thank you.
consultation. We'll look at your stuff and see where you're at. Doesn't cost a thing, doesn't hurt your credit score. And just see what you're at. Not everybody's ready, because not everybody's in the right place, but we will tell you what you need to do to get in that place.
Mm, that sounds so good. Thank you.
You're
All
welcome.
right, Amplify listeners, if you have enjoyed today's episode, give Amanda some love. Make sure you go follow her on social, check out the page, and give us a little shout out on social media. Share this episode and tell us what was a big aha moment for you. Thanks, Amanda.
Thank you.
Thanks for tuning in today, Amplifier. Be sure to join us right now in the Amplify Your Authority community at authorityamplifiers.com, and I'll share my 7 proven tips to be a highly paid expert that stands out in a crowded market. Plus, we're going to keep this conversation going, and I want to hear from you how you're going to amplify your authority and make a greater impact. Before you go, please take a minute to give our show and our guests some love over on your favorite podcasting platform. Subscribe, rate, and review. Leave your full name, and I'll spotlight you and your authority on social media.